and built a strong ecosystem of corporate partners and mentors. Previously, he led digital transformation at Eagle Point Advisors, serving in executive roles across industry. He has also founded and advised multiple digital and software ventures, including Gather Education and Hangout Industries. He has co-founded enterprise software firms with successful exits and global reach, demonstrating a deep expertise in innovation, retail tech, and scaling businesses. With that, I would like to invite Gopal and Pano on stage for this fantastic conversation. So, just a moment. I need to where sometimes, yes, Gopal and Pano. You have the controls now and you can go ahead. You should be able to speak. Yes.
Thank you, Hemant. Thank you so much for having us on this opening of day 3. Look forward to the discussion. Pano?
Thank you as well. Thank you for having us and having me in particular. Looking forward to the discussion. Great to meet you all.
Wonderful. So probably I think we have to sort of have this conversation, Pano, in terms of some of the things that we want to put forth over the next 30 minutes. So in terms of, let me just start with some opening pointers and then probably Pano, please step in. Now, one of the questions that was raised to us for this session was, how do we see the industry evolving, the traditional industries evolving? Having handled most of the traditional industries, whether it is manufacturing, industrial, high-tech, supply chain and logistics, and also been with some of these industries, I see over the last, I would say, the decade, particularly because of some of the disruptions that have happened, there is a key concern in terms of the need for visibility. There is across the board, from customers to all the way until the raw materials value chain. Now, this has prompted organizations to start looking at how do they integrate their value chain, whether it is, for example, looking at realigning the supply chains from one country to the other, probably something that we have seen during the COVID times, for instance, and even during the scenario in the Middle East. Being based in Dubai, I can sense how much of anxiety exists in the region in terms of the current crisis scenario, and when you have shortages in terms of certain products as well as consequently some services. So there is a need for people to start reevaluating where their supplier base exists. But overall, if you look at broadly the traditional industries, how are they evolving? Now, historically, if you see maybe 15, 20 years back, traditional industries used to focus on certain products. They would produce those products extremely well, and they would stay within their core competency, right? Now, that's how they actually created the differentiation. But over a period of time now, there is a need for them to branch across the value chain, essentially also looking into service-centric nature of the products. So today, you would even see some of the large earth-moving equipment manufacturers moving into services in terms of providing the not just the products but also services that go along with it, and even moving to a model of I would say the pooling services or shared services, in the sense that today, if you see, many of the warehouses are resorting to, for instance, pallet pooling. They don't want to own things. So the product companies needs to take care of the need of the service mindset of the customers, and also the fact that they don't want to spend too much of capex in running some of their businesses. So consequently, they need to also have flexible business models where they can lease, they can provide things on rental, and so on and so forth. But what it does for the traditional industries is that they try to capture as much of the value chain as possible, which is not just their core product making, but also parts that go with it, the services that go with it, and then subsequently even the financing that goes with it. And even to the extent that, for instance, in certain cases, finally, you don't, if a customer says, I can't own your machines, but I still like to, I would love to use them, then they get into a lease or a, asset pooling solution kind of an approach. And secondly, the product innovation angle is also seen as a very key differentiator. So instead of trying to introduce new products, I think there is innovation that steps in along the way. So the key things, just to summarize from how the industry is evolving. Number one, I think there is a keen interest for service integration into product portfolios. Number two, there is value chain integration that happens. Number three, innovation as well as even supply chain realignments. Pano?
Thank you. It's great to be here. Here's what I think is happening on a macro picture, and it affects not just supply chains, but all enterprise software, which is that there has been a roll-up or consolidation of functionality into very large vendors over the last 10 years. Visibility is clearly one of those. There's multiple players in those spaces. There's FourKites, there's Project 44, there's a number of others. And the API and the technology has enabled, kind of wide scale visibility as a proof point, right? If you can integrate quickly to a system, you get more visibility across multiple systems. And that's worked very well. What's missing in the market today, and is still to be determined as to how to make this work, because this is where the real predictability is critical, is the forecasting ability to understand danger, damages, challenges before they happen. Because a supply chain is not as flexible on ocean as it is in air. You can reroute a plane in minutes, you cannot reroute a ship. And regardless, and you cannot reroute manufacturing easily. So you think about where your points of flexibility are, and you look at, obviously air freight is the most flexible. And we're trying to supply chains here. Ships are next flexible, and plants are usually the least flexible. So you have this kind of like challenge of flexibility to manage in a world where information flows are moving faster than the infrastructure can move. So it's critical to kind of predict, early and often what the likelihood of an event occurring is. For example, I think we could have anticipated that the Strait of Hormuz would have been closed, or was going to be closed, when Trump started rattling his saber with respect to Iran. Did every carrier and airline, kind of shipper and freight cargo and oil tanker understand that? Well, if you're no or yes, but sometimes you just don't have a choice. I mean, if oil's moving out of the Strait of Hormuz, there's no chance of moving a manufacturing plant of oil. Like, you just can't reimagine these plants overnight. So there's incredible limitations of what visibility can do on the one hand, and then there's this kind of forecasting capability that's required on the other. So there's this nature that over time AI is going to give us better probabilities, because it has more data to work with, it has more history to work with, it has more information to work with. And we've actually looked at some companies that some have been around for a long time and some are being birthed right now that will increase the probability and the likelihood of forecasting an event a month, 2 months before it happens, which would be amazing. So there's some of that going on right now in terms of kind of elasticity of your supply chain. The other area that we think is happening at the technology level is that you're seeing an atomization of functionality. So it was like SAP, and everyone put in SAP, and SAP does everything, and one throat to choke, and we're very happy using an SAP type solution. But in fact, the reality is that the world of AI is driving atomization and functionality at very small atomic levels. We have a company actually out of Israel that is managing all the ESM parts movements for some very big critical manufacturers. It's a 5-person company. That could never have happened 15 years ago. They can integrate in a week. They can deploy, at scale in literally weeks. And so you're able to test and learn and deploy new technologies much faster than you ever could. And I think that's going to impact the solution set that's available to enterprises, and for them to basically turn on or turn off systems much more quickly than they could ever before. I mean, if you implemented SAP, there was no chance of you ripping it out ever. And upgrading it was a nightmare. But at the same time, and I'm not trying to diss SAP here, the solutions around the edges are coming around to actually take over things like procurement. So you're seeing more and more solutions that are really kind of turning to SAP into a data store and creating more opportunities for AI solutions, like the one we have in Israel called EvoLink, to actually take over more and more procurement functionality and supply chain functionalities. Anyway, that's an opening kind of salvo. Sorry for talking so long. You're muted. Why don't I can continue for a few more minutes until we find the moderator. What it means, if the implication, if a 5-person startup can manage all the parts, solutions, and delivery procurement process for a major airline, and airlines have a situation where if plane is down, parts replenishment, there you are, is critical. You're finding that pricing for enterprise software is going to decline dramatically because you've got more competition among startups. There will be 1.4 million startups, native agentic AI solutions in the market by 2030. 1.4 million. So lots of competition. You have the enterprises thinking they can build some of this themselves. They could use Anthropic or any Claude code or Cursor and do more coding themselves. And the third is the frontier models are doing more and more base functionality naturally. So you watch OpenAI's into healthcare now, doing high level information flows on healthcare. But anyway, let me bring Gopal back. I'm glad to see you're back.
Thanks, Pano. Very true that you talked about forecasting. In fact, a lot of people, a lot of organizations, particularly, mainly the traditional industries, actually realized, during the COVID times that their forecasting doesn't hold good any longer, right? Everything, what they saw the next month, the next quarter was absolutely, way different from what they probably, had, as forecast in their spreadsheets. This was kind of a wake-up call. In fact, during that time, the subsequent year, 21, we got an opportunity to work with a North American, logistics service provider who was trying to enhance their visibility tool, the digital tool, with the help of the digital twins to actually feed in, real world scenarios in terms of, let's say there is a strike at a port and, how do you reroute? There is for example, a channel being, clogged and, these kind of, the situations that they wouldn't plan for, feed those into the digital twin system and trying to figure out solutions so that they can implement those solutions when they actually face those problems in the future. And they realized this was essential because not just the visibility but ability to forecast right was very critical. In fact, that's one of the reasons that you would actually see that more and more companies are trying to get more forward as well as backward integrated and getting closer to customers more so. In fact, some of the the large traditional companies as well as even some in the the line of business, etc., they started going directly to the customers, bypassing some of the middlemen, because the middlemen actually prevented them to get complete visibility in terms of what could be the future demand, the the potential forecast. And that's where, as you rightly said, there are plenty of use cases potentially AI can actually support, because there is an automatic as well as a continuous process of data collection as well as data analysis, which then presents to you the forward-looking picture rather than the rear view mirror, right?
Yep, absolutely. Yeah, and in some industries it matters a lot. In some industries, it doesn't matter much at all. I think if you're in the air freight space, if you're moving everything by air freight, if you're in NVIDIA, the last thing you worry about is transportation costs. It's
Yeah.
just, it's just irrelevant. You're just going to get it there to the customer as quickly as possible. And cold chain is another example. If you've got biotech or pharma, you're moving that thing by air freight. And if it's not one airline, it's another. Now, if an entire airport's closed, as in Dubai, it's a very different story, right? So war puts all bets off. I don't think anyone plans for war on a regular basis from a supply chain standpoint.
Yeah.
But it is something to be aware of. I'm very excited and nervous about the compression of enterprise software pricing. I don't think people really appreciate how, and as I said, this little startup in Israel is doing all of the direct procurement in the parts industry for a major airline, and they're charging $500,000 a year. I mean, this is a multi-billion-dollar movement of product, and they're charging nothing for it because it took them nothing to build it. It took nothing to install it. And so everything is collapsing in terms of pricing, which is why I think you see right now in the industry, at least in the US, pricing for public companies of HubSpot or Salesforce or Workday or Monday, their stock prices are down 50 to 75% from their highs of just 18 months ago. And it's because Wall Street understands that there's going to be an enormous pricing pressure on these solutions to maintain pricing when you've got all these other new solutions coming at you from all sides and capabilities that act. And the best part of it all is, in this example of the procurement solution, they implement the solution in less than a week. Now,
Yeah.
think about this. A direct procurement solution can be implemented in less than a week. That's unheard of. So everything is collapsing. Time is collapsing and price is collapsing, which is great for the enterprise. It can be great for the startup because you get to market faster, quicker. But it's going to mean a rethinking of the value chain of what you're charging for a customer and what you can get in terms of long-term value. So as a venture fund, we think very carefully about later stage investments as being very challenged right now. So if you're doing a Series C or D investment, you have to have a clear line of sight of who the strategic acquirer is going to be. A, it's not going to go public 9 times out of 10. And B, what you thought was the value 18 months ago should be cut almost in half if you use public markets as your guide. And that's, for a venture fund, that's pretty damaging. So we like investing very, very early. We're usually a first money check, first investor. And we believe that the future is going to be much more the 10 to 15 to $20 million software company selling to a larger entity as a bolt-on or acquisition than as a going public standalone company.
Yeah, very true, Pano. In fact, I've had the experience of having some of the ERP systems, the big ones, being installed for certain deals, but the cost of those user licenses are too much that it starts to inflate. Eventually, for example, when somebody were to look at a SaaS-based model of getting in a subscription for a, warehouse management system or something, it probably costs maybe 250 or 300, $500 or $1,000 per month. So consequently, the whole, as you said, the price compression is substantial and significant that many of the, for the large players, it is, as you rightly identify, these $20-25 million companies. These are competing, and their price points are very, very different. In fact, earlier there was this challenge about the data sharing or the shared data handling aspect, which of course when it is regulated and tightly aligned from a legal standpoint, I think at the end of the day, even the traditional organizations, it is a win-win for them because they are able to bring down the cost in terms of visibility, monitoring, purchasing, whatever aspects the ERP can handle, right? And also in a lot of cases, they are also, as you rightly said, flexible to connect with many of the emerging systems. Plus, best part is the large organizations don't need to have their own IT teams to maintain some previous versions of
Correct.
those legacy softwares. So because the system and the innovation runs at the at the software company their end, that you don't need to worry about what innovations, what changes, and so it's every day you're actually having the latest technology, right?
Yeah, exactly. Exactly. And the switch out costs are very low. You're going to just see a rapid change in this market, and a compression in venture values. And I think a compression in a lot of venture funds. You'll have a barbell effect. You've got the very big Anthropics and the Claudes and the open AIs, creating very extreme valuations, which is tremendous for them. But the rest of the market is going to get into a very smaller footprint. The unicorn status for most venture funds and startups is going to get very barbell effect, and you're going to have a real kind of K economy, as you do in our economy today. You're going to have a K economy among venture funds.
Yeah. And indeed, we can see that most of the the traditional businesses, traditional industries, everyone is required to adopt a smart approach, which means that integrating, as you were mentioning, some of the new age startup thinking into their way of functioning. So that's what smart in today's definition looks like, which is how best are you adopting AI, IoT, sensors, drones. In fact, I've seen use cases of drones being used in warehouse checks, for example. Now, in a traditional setup, if you were to run wall-to-wall checks, somebody has to shut down the warehouse probably for about 15 days. And so during that 15 days or so, there's no transactions. You cannot retrieve any parts because they got to tally the inventory with the physical inventory, right? Today, you can actually do the same by having a drone hover around the warehouse while the work is going on, and probably in about 3 to 4 days, they get a complete sense in terms of what is a physical inventory versus what is the inventory on the books. So that's
Yeah,
how. Yeah.
Yeah, in fact, we were early investors in one of those companies. It's called Gather AI, and they've just won the contract with the largest user of warehouses in the world. You can imagine who that is. And they started out at Carnegie Mellon, and their computer vision expertise is unparalleled. And it is now, I think, the future of this logistics world in buildings is going to be really computer vision. Computer vision is going to drive all behavior, all monitoring, all counting, as we said. I think it's a brave new world there, and we're excited by it. I think the issue in that respect is that most manufacturers, their people don't know what to do with the data. So inventory counting is easily because it's a 1-for-1, but when you talk about supervising and managing a floor, manufacturing floor, warehouse floor, there's still a lack of education as to what's possible. So there's a whole training process about what you can do with the data and actually manage your businesses differently. Yeah,
Yeah.
it's really interesting times.
And also, just to add to what you said, Panu, the fact that you have much more cost-effective way of managing the data, forecasting the data, and looking at how best to make use of the data. This makes organizations more agile in actually being in a position to actually make those shifts when there are disruptions. And also, for example, today there are a lot of emerging economies are shifting to nationalistic policies, which means that rather than looking outside, they are looking inwards. Now, all these changes are still possible, which you cannot, imagine once you make an investment, then you're locked for probably, 7 to 8 years or 10 years. And so now those things are changing. So these aspects are actually making the organizations more agile, be in a position to change swiftly, because the onus is on, if let's say, for example, today they switch from a supplier in Turkey to somebody in Latin America, or to Africa, or to India, they are in a position to get the service provider to provide the same services, because they don't need to carry those visibility tools or integration tools. So this is going to be a substantial help, I would say, in the next, probably 5+ years in terms of how organizations can respond to, both in terms of policies as well as opportunities, as well as any form of disruptions that come our way, right?
Yeah, absolutely.
So with
I think our
that,
time.
yeah,
Yeah, I think our time is up. Right. I think
yeah.
we've hit our quota.
So with that, thank you,
We
Pano. I
will
think it was a
last five
good
minutes for
discussion.
conclusion for both of you.
Yeah,
So
pretty,
last
yeah,
concluding remarks.
yeah, pretty much. I think we have concluded, Hemant. I think just to reiterate the key points, at least from my side. So essentially, visibility, predictability, and be in a position to integrate, whether it is between the hard assets as well as the digital assets. I think two aspects. One, the new technologies are paving way for a price compression, and be in a position to also manage any kind of challenges more swiftly as compared to how it used to be in the past. And plus, this price compression obviously results in the much needed, cost savings moving forward for organizations.
Yeah, I agree. Couldn't say it any better. Well said.
Thank you, Pano. So
Alrighty.
that's about it, Hemant. Thank you so much for having us on this session. Back to you.
Fantastic. Thank you. Thank you, Gopal. Thank you, Pano. I think there were so many different nuggets across the board and so many and different perspectives that came into the conversation. Members out there. So just to reiterate, while we are here as speakers and participating individuals on Zoom, our entire audience is on a different platform called conferencing, a platform where they have a complete experience and so all books and in the main stage, and you are on main stage for the past half an hour. So they are all there, and they are all interacting amongst themselves through chat, and also listening to the conversations, and I'm hopefully making their own notes on things they should be discussing. And one of the things which I have mentioned over the past 2 days is that one of the core objectives of the entire Capital Conclave and the entire 11 days of agenda is to trigger conversations. In our audience, we have got investors, we have got corporate professionals, we have got startup founders, we have got researchers, institutional heads. We want those conversations to begin in the right direction. Some of the triggers that we are creating in these conversations, whether it's the fireside chat, the upcoming panel discussion, if we can trigger those conversations in the right direction, we would have really achieved something in the positive direction. So thank you once again, Gopal and Pano, for your superb insights. And with that, we will move on to our next segment, which is the panel
Great.
discussion.
Thank you.
Thank you.
Yes.